Okay, so guys, welcome back once again. Very good evening, all of you. So before the break, we have discussed about the weightage, the previous year examination question paper and all these things. December 21 exam question paper we have seen. And in this session, let us see RTP. My objective is, to the extent we can cover, we'll cover few problems, not more than that. And please keep it in mind, without practicing 3 RTPs, without seeing the question papers and suggested answers of last 3 attempt exam question papers, don't go and write the exam. It is suicidal. That means you are asking ICA to kill you. So tell me, how many RTPs you will practice? I want everybody to type 3 RTPs in the chat box. 3 RTPs. Very good. 3 RTPs, 3 previous year question papers. Okay, this is very important. So JICA, JJICA. So we are in ICA website. Okay, so Akshay, tell me how to open RTP.
Sir, Students tab.
Okay, so go to students, then
BOS Knowledge Portal.
Then
Sir, then 2 ways intermediate course. Then the subject.
Very good. I'm so happy, you know
and
this.
the RTP. Or else we can from the other page also we can take.
Correct. From there also we can. Do you know some students will ask, sir, if you have RTP, please forward. They will ask me in WhatsApp if you have RTP. And the most funniest thing is, some students will write email. Our customer care email will be there, no, for CAP classes. So they will write, dear sir, can you please send latest RTP? Simple. If it is there with me, that means I have downloaded it from ICA website. If it is not there in ICA, I do not have that. So if I send you email also, you have to click download button. No, that you can do from ICA itself. So shall we see Hindi medium or English medium? Hey, Hindi or English? Sorry, English only. We do not know 90%. What we do? Hindi, sir. Aha, first one, starting ratio analysis. Okay, so which chapter will do? Ratio analysis, cost of capital, capital budgeting, which one you want me to do? Leverage analysis, investment decisions. Then risk analysis in capital budgeting is there, dividend decisions is there. Okay, we'll see dividend. Someone is asking working capital. This, if it is cash flow statement, it will take a lot of time. Cash flow from operations, it will take a lot of time. Someone is telling investment decisions. Okay, chalo. Everybody is asking different. So we'll come in ratio analysis. I'm sure you can do. We'll start with cost of capital. Many students are asking cost of capital. Okay, so let us take cost of capital. Akshay, can you read question number 2, please?
Yes, sir.
This is ICA study material model. Have you recognized that this is ICA study material model? Copy paste, same question. Read ma.
Okay, sir. Question number 2. The information relating to book value and market value weights of X Limited is given below. It's given equity shares book value is 2 crore 40 lakhs. Market value is 4 crores. Retained earnings book value is 60 lakhs, and for preference shares the book value is 72 lakhs and market value is 67 lakh 50,000. For the debentures, book value is 18 lakhs and the market value is 20 lakh 80,000.
Very good.
Okay, the additional information given is, first one, equity shares are quoted at 130 rupees per share and the new issue priced at 125 rupees per share will be fully subscribed and the flotation cost will be rupees 5 per share. on face value.
Many students ask
The
this question, Pavan sir, if both issue price and market price is given in the question, what should I do? If new issue price is given, we'll consider that only. That means what company is saying, my market price of share is 130. But if I quote issue price at 130, people might not buy. So, there should be some teasing factor. There should be some attracting factor to the shareholders. So what I'm doing, when my market price of share is 130, I'm issuing new share at 125 only, so that people will be excited to buy. Then my flotation cost will be 5 rupees. What is this flotation cost? All the incidental expenses, like, you have to submit prospectus, then you need to pay stamp duty, and then you need to appoint one merchant banker. So the procedures, then filing papers with stock exchanges, for all these things, you have to incur 5 rupees per share on an average. So if you issue new share, you will get 125 minus 5. 120 rupees is the net proceeds. Okay, 120 is the net proceeds. Next, continue with second point, Ma.
Okay, the second point is during the previous 5 years, dividend have steadily increased from rupees 10 to rupees 16.105 per share. Dividend at the end of the current year is expected to be 17.716 per share.
So can you calculate, looking at the 17.716 and 16.105, can you calculate growth rate? I am also taking calculator. All of you take calculators. 17.716. Growth rate is 6.105. Right. What you are talking? 16.105 is equal to divided by 16.105. 10% is the growth rate. Exact 10% came to me. Sir, how to calculate growth rate, sir? I'll give you one heart attack now. Where is my pen? Is there? Battery is not there. How? Sir, आज के शाम ICA के नाम take one new battery, sir. Okay. How many of you got growth rate 10%? Dude, come on. How many? Hey, I can open by this time OneNote, no? Dear OneNote. Yes, excellent. So is there anyone who cannot calculate what is growth rate here? Hello. Anyone who wants me to explain how growth rate is calculated in this point, please say yes, so that I'll explain. Yes. Okay, देखो. Growth rate G is equal to current year minus previous year divided by previous year into 100. Okay, anything, you call it sales, you call it profit, you call it dividend, you call it earnings, any growth rate is calculated with this current year minus previous year by previous year into 100. So what is current year? They are saying 17.716. Current means latest, 17.716 minus what is previous year, one step before, 16.105 divided by 16.105 into 100. So like this, if you calculate, growth rate will be 10%. You understand? Now I'll give you one heart attack. This is how ICA solves this question. Global courses, if you see, which is actually not required for you, growth rate is calculated as nth square root of dn by d1 minus 1. So what is n here? What is N here? 5 years data they have given. Okay. So fifth square root of what is DN 16.105 divided by what is the first dividend 10 minus 1. Like this you need to calculate. We can calculate it using the scientific calculator. Easy calculation. So if you have your mobile also you can do, or if you have scientific calculator you can do. What we need to do? 16.105 divided by 10. That comes to 1.6105. Okay. Now from this, take scientific calculator, go to x power y. Go to x power y function. 5 means 0.2. Na? 1 divided by 5 is 0.2. So x power 0.2. Okay, I got 1.099. From that minus 1, I got 0.09999. If you can see, into 100%. 9.9999. Can you see that? 10%. Globally, they'll calculate like this. Okay, so basically, what is the meaning of this? You know, this is year 0. This is year N. Here 10 rupees is there. Stepwise, you are going to 16.105. This is D0 into 1 plus rate whole power N. Now you are calculating growth rate like this. So this is G. Rate is the growth. You understand? So whatever it is, we have to calculate. For ICI purpose, we have to calculate this way. So guys, tell me, do you understand this, all of you? Akshay, yes, it is calculated from compound interest formula only. Okay, dn is equal to d0 into 1 plus g whole power n. That is compound interest formula only. The whole financial management, you call it, you know, that capital budgeting or cost of capital or valuation of shares or dividend policies, everything revolves on time value of money only. Unfortunately, they removed time value of money from the syllabus. They should have kept it. In the old syllabus, time value of money is a separate chapter. They removed it. Now you are learning time value of money as a part of capital budgeting. Okay, so shall we go back to question? So please read the balance question, ma.
So the third point is 15% preference shares with face value of rupees 100 would realize rupees 105 per share.
Okay, so how do you calculate cost of preference shares? KP is equal to preference dividend divided by market price or issue price into 100. So issue price is 105. So what will you do? 15%. 100 rupees face value on that 15%. Can I say it is 15 divided by 105 into 100? 15 divided by 105 into 100. Will that be 7%, guys? Hello, respond. Is it 7%? Excuse me. In 1 week, you are writing exams. Is equal to preference dividend by market price or issue proceeds into 100. That is equal to 100 rupees into 15% divided by 105 into 100. When you calculate it, did you get 7% is my question. Correct. Super. Next one. Read, ma.
The fifth point, the company proposes to issue 11-year 15% debentures, but the yield on debentures of similar maturity and risk class is 16%. Floatation cost is 2% on face value.
So they are saying that the yield to maturity is 16% and the floatation cost is 2%. What is this yield to maturity? Any idea what is yield to maturity? Guys, can anyone tell me what is yield to maturity? No response.
So the redemption cost.
No. Yield to maturity is not redemption cost. Yield to maturity is the IRR. IRR of what, you know? I'll give you one excellent example. Actually, yield to maturity problems are newly added in study material last year. So yield to maturity problems are there in your book now. So say for example, today you are issuing debenture at 105. Okay. Face value 100 rupees. Issue price 105. Coupon rate 12%. Coupon rate how much? 12%. This is the question given, for example. 5 years is the maturity period, redeemable with 10% premium. Calculate yield to maturity. This is a question. Very important. This can be asked in the exam. So how you need to calculate, you know, year 0, year 1 to 5, year 5. Okay. So you need to write cash flows. You need to write cash flows. What is cash flow here? If you issue, you will get 105. Correct. If you issue this, you will get 105 rupees. From first year to fifth year, how much you need to pay? 12 rupees. Correct. Why 100 rupees face value? 12% coupon rate means 12 rupees you need to pay, no? But on this 12 rupees, you will get the tax benefit. If tax benefit 40% is given, you will take 12 into 1 minus tax rate. If tax rate is not there, you will take full interest. If tax rate is there, you will take interest into 1 minus T. That is how we calculate KD. So I'm not complicating the question. I'm writing 12. If tax rate is given, 12 into 1 minus tax rate you need to calculate. Fifth year, how much you have to pay? Akshay, can you tell me fifth year how much you need to pay?
Sir, 110.
110, correct. So 105 is your cash inflow. If you issue share or debenture, you will get 105 inflow. Every year you will pay 12, 12, 12, 12, 12. At the end of fifth year, you have to pay 110. Okay. Now discount factors will take. Now arbitrarily, first I'll take a 10%. I'll take a 10%. So what we do is we'll open annuity factors. We'll open annuity tables. Okay. From the annuity table, see for 0th year, always it is 1. Okay. For 0th year, always it is 1. 1 to 5 at 10%. So look here, this is present value annuity. All of you listen carefully. This is 10%. This is 5 years. So guys, can you tell me what is present value annuity factor? Relevant present value annuity factor, how much? Hello, for 5 years at 10%, can I say 3.7908? 3.7908, 3.7908. Okay, for fifth year, normal present value factor. For fifth year, 10%. So can I say 0.6209? Okay, now calculate present value of cash flow. Can I say present value of cash flow is equal to cash flow into discount factors? Okay, now add all these numbers. This is minus 8.7886. Okay. Now take discount factors at 15%. Okay, so I'll take 1 here. Guys, you identify and tell me. I'm not going to speak anything. You identify and tell me what should be the present value annuity factor I should consider at 15%. I'm actually teaching you one very important concept, both conceptually and from exam point of view. It is very important. So can I say it is 3.3522? Hello? 3.3522. Okay, 3.3522. Okay. Then tell me at 15% 5 years, can I take 0.4972? Now, present value of cash flows. Take cash flow, multiply with the discount factor, and then add these numbers. Now, the rate what we want lies between these two. 10, you are getting -8. For 15, you are getting +10. So, do you remember how do you calculate IRR? IRR is equal to lower rate plus NPV at lower rate divided by difference in NPVs into lower rate minus higher rate minus lower rate. You remember this formula? How do you calculate? Both rates are guesses. Both rates are guess only, correct? Guess rates. Okay. Now apply this 10 plus 8.7886 divided by, you need to add both because one is negative, one is positive. No, 8.78 plus 10.08 into 5 minus 10 is 5. Okay, so take your calculator. First calculate 8.78 plus 10.08. So denominator is 18.86. 18.86. 18.86. So take 8.7886 divided by 18.86, then into 5 plus lower rate 10 is equal to, you got 12.32 guys. 12.32 you got. How many of you got 12.32 guys? Do you understand how 12.32 came? That is called yield to maturity, which is KD on yield to maturity model. Do you understand what we have done? So can I say if this is an investment decision, can I say 12.32 is IRR? Do you agree with me? If I say this is investment decision, 12.32 is IRR. Guys, yes or no? So, first year, 0th year minus 105, first year 12, second year 12, third year 12, fourth year 12, fifth year 12 plus 110. So, the discount rate that equates the present value of this with the present value of this, the discount rate is there, no? This is KD. This is IRR definition. The rate which equates the present value of future cash flows, cash inflows with the present value of cash outflow is IRR. Same definition here. Here we are saying KD. Why, you know? Akshay, can you tell me why we are doing both in same manner?
I don't know, sir.
Akshay, you are there?
Sir, yes, sir. I don't know, sir.
Simple equation. If you buy debenture, as a debenture holder, if you buy debenture, what is that to you? Is it an asset or liability? Akshay, if you buy debenture, that is an asset or liability for you?
Sir, assets, sir.
So what are you doing when you are buying debenture? What are you doing? Investing.
Investment.
So if it is investment decision, your rate of return is IRR only, no?
Yes, sir. Yes.
So from debenture holder point of view, buying a debenture is his investment decision, na? That's all. Because it is investment decision, this KD is my return on investment. From debenture holder point of view, whatever is return on investment, from company point of view, it is cost of capital. From company point of view, it is cost of capital. Why? You know, simple. Look here, if I am debenture holder, I will invest it. So if I am debenture holder, 105 is outflow. Remaining 2 are inflows. If I am company, 105 is inflow. Remaining are outflows. So for company, this is inflow, this is outflow, this is outflow. For investor, this is outflow, this is inflow, this is inflow. That's all. So from investor point of view, this is return on investment. For company point of view, this is cost of capital. So from investor point of view, it is IRR. From company point of view, it is KD. Oh my God. But ICA doesn't want to torture you. That is the reason they have given yield to maturity on similar classes 16%. Thank God they have given that. You don't need to do anything. Otherwise, for 11 years, you need to do this. Tax benefit is there. Yes, Akshay, then what happens is, if, see, Akshay, tax benefit will be there, but what if company's tax rate is 30% and investor tax rate is also 30%? Then again, KDV and IRR will be same. It will be different if the company is in 40% tax bracket and investor Pavan is in 25% tax bracket. Then that rates will not match. That could be different. Akshay, you understand this? Your point is right. If tax benefit is considered, these rates will not be same. But again, if tax rates are same, that is the reason all these people, whoever develops, you know, any theory, like it could be Gordon, it could be, Walter, it could be Modi Glennie Miller. They will tell one thing: I do not want to deal with the shit. So I am assuming there are no taxes. You can't even imagine how many books I have read. Okay, for financial management, you name, a decent international book, I might have read that. Maybe it is little exaggerating, I understand, but still I have read enough books in my life. Enough books like Van Horn, books like Hongray, so which are considered to be the Bible and Bhagavad Gita of financial management. Those books also I read. Then the more you read, the more you, oh, this is the logic why. As a student, I got only one question. Okay, this shameless idiot who assumed there are no tax rates and developed a theory, what kind of dash he is? Is this assumption practical, realistic? I went to my faculty and asked, sir, how come some idiot assume there are no taxes and develop a theory, sir? Why you have accepted the theory? Why you are teaching? Why I am learning that in the class? Because it is unrealistic assumption. My faculty gave a look. But if my student asks this kind of question, I have answers. So Akshay, your answer is right. Tax rate makes the difference, but again, it is subject to so many permutations and combinations. Okay, now corporate tax rate is 30%. They have given corporate tax rate also. Now you are required to determine the weighted average cost of capital of X Limited using both the weights. What both the weights? Dude, what is meant by both the weights? Both the weights means one is book value weights, one is market value weights. So shall we do that? Put the heading. RTP May 2022 cost of capital. Okay. Right on. See, as it is, they have done same calculation of growth rate. How they calculated growth rate? 10% we calculated, no? Same thing they also have done. See this. Already we have done that. But actually, to be honest, see, I am always ICI side, but here I am student side, okay? They should have allowed scientific calculators if they are giving this kind of equations, okay? They cannot teach in, trial and error way. This kind of things, 10 into 1 plus growth rate whole power 5 is equal to 16.105. Next second, you have to use scientific calculator. Otherwise, what you have to do, you need to open annuity factor table and you need to search where this 1.6105 is. How, you need to open this present value annuity factor table, future value annuity factor table. In 5th year, you have to search it like this. In 5th year, no, future value normal table. In 5th year, you have to search it. Hello, 5th year. So this is 5th year. Now you tell me where you can see that 1.6105. Guys, can you tell me in 5th year where you can see that 1.6105? Can someone respond, please? In 5th year, where can you see 1.6105? 10%. So they said growth rate is equal to 10%. Array, how will you search in future value table? In the exam, they have to give future value table. That is probable. That is point number 1. Point number 2, you should search it. What if the rate is 18.25%? How will you search? What if the rate is 17.4? How will you search? What if the rate is 9.86? How will you search? So that is the reason I told you globally they calculate it like this. Nth square root of dn divided by d1 minus 1. This is how we teach in ACCA and CPA. Okay, chalo, anyway. So now that we understand growth rate is 10, write the equation. Cost of equity is equal to, cost of equity KE is equal to, KE is equal to D1 by P0, because in this problem flotation cost is given minus F plus growth rate into 100. Okay, D1 already given in the question, 17.716 divided by issue price is 125 minus flotation cost is 5 plus growth rate is, don't take 10. Hello, all of you listen carefully. Don't take 10, take 0.1. Why? Because you are multiplying that with 100. If you take 10 here, your answer will be wrong. Many students will do this mistake. Don't take growth rate 10, always growth rate should be taken in decimals. Can someone solve this equation and tell me what is KE? Hello, I'm not getting any answers. Sir, you open your mobile, you also do, sir. Why you are sitting like this, sir? Okay. I'm getting 24.76. Is it right? 24. Yes, is it right? Yeah, 24.76. Correct. Then why they calculated cost of retained earnings? Okay, for book value, write down. 2. Cost of retained earnings. 2. Cost of retained earnings. Cost of retained earnings is equal to cost of retained earnings and cost of equity same. But what is the difference? For equity, you have to issue share and you need to incur flotation cost. For retained earnings, you will calculate it on the existing, shares market price, because you need not issue new share to use retained earnings, no? That are already available in your pocket. You can spend whenever you want. So D1 by P0 plus growth rate into 100. What is D1 here? Same. D1 is same, 17.716. 17.716. Remember, there will be no separate dividend for equity share and retained earnings. Both put together is same shareholder. So dividend paid on equity share and as a return what you give on reserves, they are not different. They are same. P0 means existing shares market price you will take. You will not take 125. Why? 125 is the issue price if you are issuing new equity share. To use retained earnings, you don't need to issue any share. So guys, can you tell me how much this is? Hello. Can someone calculate and tell me this, please? $23.63. Shamil is saying, Sriraj is saying same thing. Very good. 23.63. Very good. So this is KR. Next, write down. 3. Third note. First note, cost of equity. Second note, cost of retained earnings. 3. Cost of preference shares. Cost of preference shares. Cost of preference shares. 3. KP is equal to preference dividend divided by issue price into 100. Hey, some idiot, I asked, is it 7%? Some idiot said yes. Seriously, I should kill you now. Whatever lecturer is asking, you are saying, correct, sir, correct, sir. I said it is 15 rupees divided by 105 into 100. Calculate and tell me, is it 7%? I asked. And you said, yes, sir. 7%, sir. In Telugu, we call these people Gorrelamanda. Bunch of sheep. So calculate 15 by 105, how much? 14.286. 14.29%. Third one, 14.29%. Correct. Sriraj is saying, sir, I noticed, but thought I missed something in between. Okay, very good. Aha, Naraja. Cost of debenture. See how they have calculated. Okay. So, 4. KD, since it is redeemable, globally will not do problems like this. This is ICA model. Hello, do you know? Always there are 3 answers to every question. Hello, do you know? Always there are 3 answers to every question. One is right answer. One is wrong answer. One is ICA answer. So how ICA wants, like that, you need to package your answer. Okay. Otherwise, ICA will not accept it. So cost of debt redeemable is equal to KD is equal to I into 1 minus T plus redeemable value minus market price divided by number of years whole divided by redeemable value plus, you can take issue proceeds or you can take market price divided by 2 whole multiplied by 100. This is the formula. So you have seen this formula before, all of you? Very good. So put the numbers in this and tell me. So market price of debenture is given. Raja, students will die here. Super. Shit, dude. Student will die here. They have calculated market value approximation method. Put a star mark, write down. Calculation of, even if I am a student, I'll tell you, if I am a student, I'll tell you, I would have probably taken just this 16 rate is there, no? 16 rate they have given, no? Here is the question. Okay, I'll tell you what mistake normally students does. In this, look here. This is the data. From this data, they have calculated what is called as theoretical intrinsic value they calculated. So they have done reverse engineering. They have done reverse engineering. If a 15% debenture, what they have done, you know, if a 15% debenture has 16% yield to maturity, if a 15% debenture has 16% yield to maturity, what would be the market price? What would be the market price of such debenture? If a debenture, 15% debenture of ₹100 face value, write down this in your notes, because you cannot even understand what is the logic ICA is calculating. What is the question? If a 15% debenture of ₹100 face value has a 16% yield to maturity, what would have been the market price of such a debenture? How do we calculate it? 100 rupees divided by 16 into 15. That should be 93.75. Huh? But they got a different answer. So they are subtracting 2 rupees from there. What else they have done? This kind of points are enough for students to fall down and get a heart attack. So don't worry, we are dealing with a difficult question, so it happens. So how come they got 91.75? You know, flotation cost. So the intrinsic value of debenture is 93.75 less flotation cost. 2% they have given, no? 2% means 100 rupee face value into 2%. 2 rupees. Therefore, you call it issue price or you call it market price, will be this 91.75. Hana Raja. JICA. Now you apply this big formula with 91.75. This formula you apply with 91.75. So what is interest? 15 rupees into 1 minus 0.3 plus what is redemption value? If nothing is mentioned, we'll take 100 rupees. We assume that debentures are redeemed at par, minus 91.75 divided by 11 years, whole divided by 100 plus 91.75 divided by 2 into 100. Okay, guys, can you simplify this and tell me? So this is 10.5. This is 100 minus 91.75 divided by 11. This is coming 0.75 divided by 191.75 divided by 2. 95.875 into 100. 10.5 plus 0.75 is it 11.25 divided by 95.875. It is coming to 11.74. So how many of you got 11.74, guys? Guys, how many of you got 11.74? Shamil is saying 11.74. Correct. What about others? Akshay is saying I got. Vaishak, correct. Vishnu Priya Unikrishnan, correct ma. Ajit, correct. Sarah, correct answer. Very good. So guys, tell me one thing. Do you understand how ICI calculated this market price of debenture? It's a peculiar thing, no? Now Akshay will get it out. Sare. Oh, Sare. Sare, Sare. Go back to the question. Look at the market value of debentures. Look at the book value of debenture. One smart student will ask this doubt. Pavan sir, why can't I take 20,80,000 divided by 18 lakhs into 100? So market price of debenture is 115 rupees. This is the killer. Actually, company's book value of debentures is 18 lakhs. Market value is given in the question as 20 lakh 80. That means 100 rupee debenture, 100 rupee face value debenture is having a market value of 115. No student will get a heart attack. Then what the hell that 91.75 is? What is that, you know? Because there is a difference between the coupon rate and yield to maturity effective cost of capital. If you are issuing debentures again in the market, in the stock market, people will not value your debenture this time. This time, if say, for example, Rachana is CFO of the company, Rachana is issuing debentures again. Pavan, who is a knowledgeable investor, is not buying. Then Rachana comes to me and asks, Pavan, why are you not buying my debenture, Pavan? Why are you not buying my debenture, Pavan? I'll tell her that your debenture in the market is overpriced. I will not buy. I'm not an idiot to buy. Then she asks, okay, now you tell me, Pavan, what will be the fair value of my debenture? Then I will calculate and tell, if you issue at 91.75, then only I will buy. How come 91.75 is calculated? Like this, it is calculated. Now Rachana will understand, oh, my company debenture is overpriced in stock market. My debenture actual price should be 91.75. Too much of information for CA intermediate level student, no? Guys. Okay, now that we calculated cost of all the components, isn't it very simple to calculate weighted average cost of capital now? Hello, put the heading calculation of weighted average cost of capital. Calculation of weighted average cost of capital. Calculation of weighted average cost of capital. Okay. Akshay, please turn on your mic and respond, please.
Yes, sir.
Okay, so tell me how many sources of capital are there?
Sir, equity.
Firstly, share capital is there, then
Sir, then reserves.
reserves is there,
Then preference shares, sir.
preference share, then
Then debentures.
okay, book values, tell me whatever is given in the question. You don't have the question, I need to tell me in lakhs. 240, yeah.
Okay, sir, 240.
Then 60,
Then 60
then
lakhs.
uh,
Sir, then 72 lakhs.
uh,
18 lakhs.
so total 390, correct?
390. Yes,
Now
sir.
calculate weights. Can I say weight is 240 divided by 390? Then
Yes, sir.
60 divided by 390. 72 divided by 390. Yeah. Admin, we will complete this question. Okay. Within no time, we can complete this question. So this is one. Now take the cost. Cost of
Sir,
capital.
cost of equity 24.763, sir.
24.763. Okay. Next.
Yes, sir. For the reserves,
Uh,
23.627.
23.62. Okay. Next. Preference.
Sir, preference share 14.28, sir. 286.
4.28. Okay. Next. For debentures.
So for debentures, 11.734, sir.
So multiply. So weighted average cost of capital based on book values is 22.05%. You understand? So let us check the answer with ICI answer. Dear ICI, how much you got? $22.05 exactly. So this is our answer, and this is 22.05 ICI answer. Guys, you understand how we calculated this? All of you, please respond before we log off. Please respond. Did you understand how this weighted average cost of capital is calculated? Very good. Now in market value, what you do is market value of equity shares, you will take whatever is given in the question, you will distribute that in this ratio between equity shares and reserves. For example, in the question, how much they have given? 400 they have given a market value, 400 they have given. So you will distribute that 400 between equity shares and reserves in 240:60 ratio. Then that's all. You will calculate cost of capital. So market value will be 320 here, 80 here, then 67.5 and 20.8. Whatever is given in the question. What I have done is this two put together is given in the question like 400 that I distributed between share capital and reserves. Okay, now you will calculate weights and you will take the cost. You will calculate weighted average cost of capital. Market value weights. Guys, all of you try to solve this yourself. 22.57 I got. ICI also got 22.57. Answer is over. So the crux of this problem is calculating this 91.75. If you know how to calculate this 91.75, all the remaining problem you can easily manage. So they'll give this question for 10 marks. Guys, do you understand now why Your faculty is dying, requesting you, begging you, solve RTPs, solve RTPs, solve RTPs. This is the reason. Okay, always you need to do 2 to 3 RTPs minimum. Okay, so guys, you understand all these things. Any doubts in this question, whatever we have discussed so far?